Robschild, nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. J.P. Morgan once said, "Millionaires don't need astrologers, but billionaires do." And so we begin. Today is Tuesday, April 2nd, 2024. Most notable data coming out today was, of course, the JOLT, the job openings. Last month was 8.8 million. The expected was 8.8 million. And the actual 8.8 million. Couldn't be flatter than that. Now, yesterday I had discussed today being like the day where we start to see some patterns emerging as to where things really actually want to go. Yesterday was kind of a reaction to the PCE data, but also the beginning of a new quarter. So things, they need to adjust a little bit. And so, I had said today is a lot more interesting than yesterday because now we get to see where things really might actually go. And we're having some interesting developments across markets today. We'll start with the S&P 500. It's hard to see this little green candle. I gotta zoom in a little bit here. But this was our green candle today, a little tiny green candle. And, it being green doesn't mean a whole lot other than it opened lower than where it closed. I mean, obviously we had a pretty big drop. The big headline that you'll see out there today is, the Dow dropping 500 points, which as markets get higher, 500 points becomes less and less points because it's less of a percentage. I believe right now that counts as 1% of the Dow Jones in one day. And so that's a pretty big move for an index like that. And you can see similar, jump down in SPY. This isn't necessarily leading to a complete collapse where everything goes down from here, but hold on, let's take a look at the crystal ball. It might. Why might it? Well, let's take a quick look at one good indicator that I like to always keep an eye on, the Fear and Greed Index from CNN. The notable thing here is that, the previous close yesterday, we were at 72 on this reading, dropping all the way down to 63 today. That is a very large drop in the Fear and Greed Index. And if this continues, we can easily get to neutral. And, this is the kind of thing that can gain momentum towards the extreme fear. Markets are not always in greedy mode. Sometimes they're in greedy mode, sometimes they're in fearful modes. When I take a look into the crystal ball, I see fear ahead. Now, while I see fear ahead for lots and lots of different reasons that I've been discussing on this show now for a while, HYT, high yield corporate, a great indicator of the risk of bankruptcy in higher risk corporate bonds, again, they don't seem very fazed by anything. They're still going sideways here. Until this starts really breaking down, it's going to be more difficult for the stock market to really have a sizable move down. If there's no higher risk to bankruptcy in companies that have to pay more for the money they're borrowing, the value of stocks don't need to go down here. They don't have to collapse. When HYT starts really tanking, that's like, for me, the loudest alarm bell that you can have. And so when we're not seeing a breakdown here yet, not yet. I noted yesterday that the 30-year Treasury yield, it popping yesterday, I expected it actually to reverse straight back down with my crystal ball and all. And instead, we went straight up. Now, granted, this is not this is the kind of a pattern. This can count as a doji, this little tiny candle here. with the two big wicks. This can still reverse straight back down, so we'll see how that goes. The interesting interplay here is that when stocks crash, money tends to flood into treasuries, and treasury yields go down. And so, I saw in the news today some headlines suggesting that it's the higher yields in treasuries that are really tanking the markets. I don't think that's what's going on here. Certainly it's not evident in today's movement in the 30-year bond yield. This is not a strong move up. This is this is a battle zone right here. This has become a battle zone. This could easily go up or down from here. I believe that I don't think yields can keep going up based on what's going on in markets right now. But, who am I? I don't have a crystal. I got the crystal ball. I'm the guy with the crystal ball. I find it useful to always also take a look at TLT because, one thing about the 30-year Treasury yield chart, that it closes at like 1 p.m. or something. And so the market has several hours after that market officially closes to see what's going on in the actual pricing of bonds, which have a direct connection to the yield. They control the yield really, and so it's good to not just look at the yield. And so this candle here shows a little different story, right? We have it's a little bit larger. It's not so doji looking, but it's a green candle, right? So that means we opened lower and moved higher throughout the day, which means it partially means retailers are selling bonds, and to me this could mean that it's the institutions that are buying back into it. They like where yields are, and I do too. I'm a buyer of long duration treasury bonds myself today. It hit 4.5%. If the Fed really is still guiding us to a 2% inflation rate, that means that there's a 4.5% yield on a 30-year treasury bond is still a 2.5% real yield. Real meaning purchasing power. Nominal means the number. Real means purchasing power. So taking inflation out of the picture. So will yields continue to climb and TLT continue to drop? I don't know. If it does, I will likely begin trying to go from about a 40% position in a TLT-like fund to a 50% position, especially if we get back to a 5% yield. I'd be very happy to have that, and I can be patient and sit on that for a long time until it's inevitable that those yields will reverse. Nothing's changed demographically. We still have an aging population. We don't have any drivers of inflation other than the Fed spent too much money because of COVID. That's pretty much it. And then some supply chain disruptions, which are healing now. And so it's just like, I look into my crystal ball, yields will go back down. I think they'll go down sooner and faster than other market participants right now. Moving on to other notable charts, this is the VIX. This is what gamblers are thinking is going to happen. We had quite a spike in it, and this can indicate more volatility coming, especially if this continues higher. A big move like this in the VIX, this easily can turn into a much bigger event. It can also just be a one-off event and reverse right back down. It's hard to say. I do see more volatility coming. I think that this week is going to be I think this week is going to continue to show and prove that the AI bubble has burst and is now shrinking. I think this is it. I think the VIX will keep going higher from here. Will it? Oh, of course it will. I see it. I see it right there. Moving on, I want to take a look at wood. I just realized some trend lines here that became very interesting, hitting 1, 2, 3 very recently on the high side of wood, and 1, 2, being sort of this channel that we're in wood. And so at the very least, I mean, if we continue the pattern, we hit the bottom, we hit the top, are we headed back down to the bottom of this channel? It could be. It looks like, I mean, as far as patterns go, and this is something I do like to look at as a way to help me solidify or give question to what I think is going to happen in the future with markets. And this is turning over here. This is going down now, wood. So it'll be interesting to see if this starts to collapse along with a lot of other things or not. And so we'll see how that works out. I wanted to also take a look at ARK K. We had a bit of a violent move in ARK. This has been going sideways very orderly, and we had a break in it today. This is what's called a gap down, where nobody was paying for ARK in between yesterday's candle and today's candle. It just dropped straight down here, and so we'll see if this also continues to be one of these kind of breakdown scenarios, or if this is a one-off event and people see this as a buying opportunity. I don't think so. I think this is going to continue to break down. Now, a few charts that really caught my eye, kind of going against what I've been saying throughout the rest of this video in the past week or two, is copper. This is copper miners, the value of companies that produce copper. We're going up here. Is this, I mean, this might have to do with China, actually showing a little bit of strength at the moment. I'm not really sure, but copper's up right now. I'm surprised by this. I would not have expected, with all the other charts that I'm looking at, for copper to actually be going up on a day like this, copper miners. All while oil went up today too. So the cost of producing things like copper and all these things is going up, and yet the people that are mining copper and selling it are worth more. I mean, interesting, right? So also in silver, silver miners, this yesterday looked like it looks like a doji candle right here. It's something that can easily reverse right back down, but silver continuing higher, silver miners. So that is interesting. This is an area where I sold out of all of my silver position in this area because of overall market risk. I didn't like the risk and reward that I saw, and so we'll see. Is this going to be a big break in silver and a big silver squeeze? Maybe not. One thing I've learned over my time with investing and charting and listening to people smarter than me and reading books and understanding the gram is that FOMO is not your friend. When you had something and you owned it and you sold it and then it went way up in price, that can cause people to make big mistakes in the future. It can cause people to use their emotions to make investing decisions, and emotions and investing decisions are typically not, it's not a good combination. And so, and it's always important to check your emotions whenever you're looking at any chart, any speculative position that you have. Always realize that your crystal ball might be wrong. Always realize that your position might be wrong. You might believe something that is just totally not true. And so, it's just important to be careful, have a little bit of carefulness in all of your decisions, and be prepared to be wrong. Be prepared to be wrong. And be okay with being wrong. These are all very important parts of being an active investor that I think are very important. That's all I have for today's show. Thank you for watching, and see you next time. Robschild.